Welcome to Quantum Wallet, your trusted source for expert financial insights and stock market analysis. In today's video, we're exploring NIO Inc., one of the most talked about companies in the electric vehicle sector. We'll explore NIO's current financial standing, the key drivers of its growth, the risks it faces, and most importantly, our expert prediction for its stock price by 2025. NIO is a major player in the electric vehicle industry, often referred to as the Tesla of China. Its innovative technology and aggressive growth strategy have captured the attention of investors worldwide. But is NIO a smart investment for your portfolio? Stay with us as we analyze the data and provide you with actionable insights to help you make an informed decision. Before we begin, don't forget to like this video and subscribe to our channel for more in-depth financial analyses. Now, let's get started. Overview of NIO Technologies. NIO Inc., founded in 2014, is headquartered in Shanghai, China, and focuses exclusively on premium electric vehicles. Thanks to its innovative features and strong brand identity, the company has positioned itself as a leader in the EV market. NIO offers a range of luxury electric SUVs and sedans, including the ES6, ES8, EC6, and the ET7 sedan. Its vehicles are equipped with state-of-the-art technology, including advanced driver assistance systems and customizable user interfaces. One of NIO's standout innovations is its battery-as-a-service, or BaaS model. This subscription-based service allows customers to rent batteries instead of purchasing them, significantly reducing the upfront cost of owning an EV. BaaS also enables users to upgrade their battery technology over time, enhancing customer loyalty and long-term revenue for the company. Another key feature of NIO's strategy is its battery swapping technology. Instead of traditional charging stations, NIO has built a network of battery swap stations, allowing drivers to replace depleted batteries in just a few minutes. As of 2023, NIO operates over 1,800 battery swap stations globally, with plans to expand to 5,000 by 2025. In addition to its focus on China, NIO has made significant strides in international markets, particularly in Europe. The company has launched its products in Norway, Germany, and the Netherlands, targeting environmentally conscious consumers with a taste for luxury. NIO's ambitious vision is to become a global leader in the electric vehicle space, while redefining customer experiences through innovation and technology. These factors have positioned NIO as one of the most exciting companies to watch in the EV sector. Now that we've covered what makes NIO unique, let's move on to its financial performance to understand how the company is doing in numbers. Current financial performance. Now that we understand NIO's business model and innovative edge, let's dive into the numbers that define its current financial performance. As of the latest earnings report, NIO's total revenue for the third quarter of 2023 stood at approximately $2.1 billion. This represents a 25% year-over-year increase, driven primarily by higher vehicle deliveries and steady growth in its BaaS subscriptions. Speaking of vehicle deliveries, NIO reported delivering over 55,432 vehicles in Q3 of 2023, an impressive 33% growth compared to the same period in 2022. This strong delivery number is a testament to NIO's ability to meet rising demand despite challenges like supply chain disruptions. On the profitability side, however, NIO has yet to achieve consistent positive net income. The company reported a net loss of $578 million for Q3 2023, highlighting the growing costs of expansion, R&D, and global market entry. While this might sound concerning, NIO's gross margin remains a bright spot, coming in at 16.4%, indicating efficient production and pricing strategies. Another critical metric to consider is NIO's cash position. The company reported $6.4 billion in cash and short-term investments, providing a solid financial cushion to weather short-term challenges and invest in long-term growth. In terms of stock performance, NIO's share price has experienced volatility over the past 2 years, reflecting investor sentiment around the broader EV market and China's economic conditions. In early 2021, NIO's stock hit an all-time high of 60 SGD per share, but as of late 2023, it trades closer to the $12 to $15 range. This decline is partly due to market-wide concerns over inflation, rising interest rates, and competition in the EV space. However, many analysts view this as an opportunity, with NIO being undervalued relative to its growth potential. Overall, NIO's financial health is a mix of strong revenue growth and delivery performance, balanced by the need to manage rising costs and achieve profitability. In the next section, we'll explore the factors driving NIO's growth and why it's poised for long-term success. Growth drivers for NIO. Let's now discuss the key growth drivers that could propel NIO to new heights by 2025. First, the global electric vehicle market is expanding at an unprecedented rate. According to Allied Market Research, the EV market is projected to grow at a compound annual growth rate of 22% between 2023 and 2030, reaching $1.3 trillion by the end of the decade. As one of the most innovative companies in this space, NIO is well positioned to capitalize on this growth. A significant factor behind NIO's success is its innovative battery-as-a-service (BaaS) model. This subscription service has already attracted thousands of customers, reducing the upfront cost of owning an EV by up to 20%. It also provides a recurring revenue stream for NIO, which is critical for long-term profitability. Next, NIO's battery swapping technology gives it a unique competitive edge. By the end of 2023, NIO had completed over 26 million battery swaps globally, offering convenience unmatched by traditional charging stations. With plans to increase its swap stations to 5,000 by 2025, this infrastructure is likely to strengthen customer loyalty and expand market share. International expansion is another key driver. NIO's entry into European markets, including Norway, Germany, and the Netherlands, has been met with positive consumer reception. These markets, known for their EV-friendly policies and environmentally conscious consumers, provide fertile ground for NIO's growth. Additionally, NIO's commitment to innovation in autonomous driving is a critical differentiator. The company's NIO Autonomous Driving (NAD) system, equipped with advanced sensors and AI algorithms, positions it as a leader in the future of self-driving technology. NIO aims to roll out fully autonomous features by 2025, which could be a game-changer in attracting tech-savvy customers. Lastly, government incentives and policies in China and Europe are playing a pivotal role in driving EV adoption. China's 2035 target to transition to 100% new energy vehicles aligns perfectly with NIO's growth trajectory. With these factors combined, NIO has positioned itself as a frontrunner in the EV market, offering compelling growth opportunities for both the company and its investors. In the next section, we'll focus on the potential risks and challenges that could impact NIO's future journey. Risks and challenges. While NIO has significant growth potential, it's crucial to consider the risks and challenges that could impact its future. First, competition in the electric vehicle market is intensifying. NIO is up against industry giants like Tesla and BYD and new entrants such as Rivian and Lucid Motors, all vying for a share of the rapidly growing EV market. Tesla, for instance, has a global manufacturing footprint and established brand loyalty, making it a tough competitor. Second, the company faces geopolitical and regulatory risks. As a Chinese company, NIO is affected by trade tensions between China and the United States. Potential tariffs, Export restrictions or regulatory hurdles could impact its ability to expand in key international markets. Economic uncertainty in China also poses a risk. China's slowing economic growth and real estate market issues could affect consumer purchasing power, potentially impacting demand for NIO's premium EVs. Another major challenge is profitability. While NIO has demonstrated strong revenue growth, the company is not yet consistently profitable. Its operating costs remain high due to heavy investments in R&D, battery infrastructure, and global expansion. Achieving profitability by 2025 will require disciplined cost management and scaling its operations efficiently. Raw material costs are another concern. The production of EV batteries relies on critical materials like lithium, cobalt, and nickel. Volatility in the prices of these materials can significantly affect NIO's production costs and margins. For instance, lithium prices surged over 400% between 2021 and 2023, creating challenges for the entire EV industry. Additionally, NIO's ambitious global expansion strategy brings logistical and operational complexities. Establishing new manufacturing plants, building supply chains, and navigating unfamiliar regulatory environments in Europe and other regions can strain resources and pose execution risks. The broader macroeconomic environment also plays a role. Factors like inflation, rising interest rates, and fluctuating foreign exchange rates can impact both consumer demand and the company's financing costs. Lastly, while NIO's innovative battery swapping technology is a strength, it requires significant capital investment. Scaling the battery swap station network globally will take time and financial resources, and its success depends on widespread consumer adoption. Despite these challenges, it's worth noting that many of these risks are common to the EV industry as a whole. NIO's proactive approach to innovation, partnerships, and strategic planning gives it a solid foundation to navigate these obstacles. In the next section, we'll examine the stock predictions for NIO by 2025 based on current trends and expert analysis. Stock predictions for NIO by 2025. Now, let's dive into what everyone wants to know. Where could NIO's stock price be by 2025? To make informed predictions, we'll consider three scenarios: bullish, bearish, and most likely based on current market trends, financial performance, and industry dynamics. Bullish scenario. In an optimistic scenario, NIO could leverage its innovative business model, global expansion, and growing consumer base to achieve remarkable growth by 2025. The global EV market is projected to grow at a compound annual growth rate, CAGR, of 22% through the next decade, and NIO is well positioned to capture a significant share of this growth. If NIO continues to expand its delivery numbers at a rate of 30 to 35% annually, we could see annual vehicle deliveries exceed 400,000 units by 2025. This would translate to revenues surpassing $15 billion annually, assuming an average vehicle price of $37,500. Additionally, NIO's battery-as-a-service, BaaS subscription model, and battery swapping technology could create a recurring revenue stream of over $2 billion annually by 2025. These innovations could also attract environmentally conscious and tech-savvy customers, solidifying NIO's brand as a premium EV provider. Under these circumstances, analysts estimate that NIO's stock price could reach $50 to $60 per share by 2025. This would represent a significant recovery from its current range of $12 to $15 and align with the growth trajectories of its peers, such as Tesla and BYD, during similar phases of expansion. Bearish scenario. However, no investment is without risks, and a bearish scenario must be considered. In this case, intensifying competition from Tesla, BYD, and newer entrants like Rivian and Lucid Motors could erode NIO's market share. Economic uncertainties in China, including slower GDP growth and declining consumer confidence, could further dampen demand for premium EVs. Additionally, rising raw material costs and supply chain disruptions could put pressure on NIO's margins, delaying its path to profitability. If NIO struggles to scale its operations efficiently or faces delays in expanding to global markets like Europe, its revenue growth could stagnate at around 10 to 15% annually. In such a scenario, NIO's stock price might remain in the $10–15 range by 2025, reflecting minimal growth and investor skepticism about the company's ability to compete for the long term. Most likely scenario. Now, let's focus on the most likely scenario, which takes a balanced view of NIO's strengths and challenges. Based on current delivery growth trends of 30% annually, NIO is expected to deliver approximately 350,000 vehicles by 2025. This would bring its revenues to around $12–14 billion annually, supported by its BaaS model and other innovative services. Assuming NIO achieves gross margins of 20% and gradually reduces operating losses, profitability could be on the horizon by late 2025 or early 2026. In the global market, NIO's focus on Europe could yield strong results, with countries like Norway and Germany adopting EVs at an accelerated pace. If NIO can execute its plans to expand its battery swap stations and establish manufacturing facilities abroad, it will strengthen its brand presence and operational efficiency. Under these conditions, analysts project NIO's stock price to range between $30 and $40 per share by 2025. This valuation is supported by a price-to-sales ratio of 3 to 4x, consistent with industry averages for companies in a high-growth phase. Key factors impacting predictions. Several factors will determine where NIO's stock price ultimately lands. Execution. NIO must deliver on its expansion plans, particularly in Europe and other international markets. Profitability. Investors will closely watch NIO's ability to reduce costs and turn a profit. Innovation. Continued advancements in battery technology, autonomous driving, and customer-centric services will be critical. Macroeconomic conditions. Global inflation, interest rates, and geopolitical risks could influence demand and operational costs. While the exact price of NIO stock in 2025 is impossible to predict with certainty, the company's strong growth drivers and innovative edge make it a compelling investment for those with a long-term perspective. In the next section, we'll provide actionable advice for investors and share tips on how to include NIO in a diversified portfolio. Investment advice. Now that we've covered NIO's potential, let's talk about how you can approach investing in NIO as part of your portfolio. First, it's important to recognize that NIO is a high-growth, high-risk stock. This means it's best suited for investors with a long-term outlook and a higher tolerance for volatility. If you're a long-term growth investor, NIO's innovative business model and expanding market share make it a promising addition to your portfolio. Its focus on premium EVs and technology-driven solutions positions it well in the rapidly growing electric vehicle industry. However, for short-term traders, NIO's stock can be quite volatile. Factors like quarterly earnings reports, geopolitical developments, and macroeconomic conditions can cause significant fluctuations in its price. To manage risk, consider starting with a small position in NIO and dollar-cost averaging. This strategy involves regularly investing a fixed amount, regardless of the stock's price, reducing the impact of market volatility. Diversification is also key. Rather than putting all your money into NIO, spread your investments across other sectors and industries. You might consider combining NIO with other EV stocks like Tesla or BYD, or even companies in renewable energy, AI, or battery manufacturing. Remember, investing in NIO is not without its challenges. Be prepared to hold through periods of uncertainty and focus on the long-term growth potential of the electric vehicle market. Lastly, always align your investment decisions with your financial goals, risk tolerance, and time horizon. As always, consult with a financial advisor before making any significant investment decisions. Conclusion. To wrap up, NIO represents one of the most exciting opportunities in the electric vehicle market today. The company's innovative approach, including its battery-as-a-service model and battery swapping technology, has set it apart from competitors. While there are risks such as competition, geopolitical factors, and profitability challenges, NIO's growth drivers are strong. Its expanding footprint in China and Europe, coupled with a growing customer base, makes it a stock worth considering for long-term investors. Our predictions suggest that NIO's stock could reach anywhere between $30 and $60 by 2025, depending on how well the company executes its plans and navigates industry challenges. Thank you for watching this detailed analysis of NIO stock and its future potential. If you found value in this video, please give it a thumbs up and subscribe to our channel for more expert financial content. We'd love to hear your thoughts in the comments. Where do you think NIO's stock is headed by 2025? Let us know and let's start a conversation. Before we go, here's a sneak peek at what's coming up next on Quantum Wallet. In our upcoming videos, we'll dive into the future of EV competitors like Tesla and BYD, exploring their growth strategies and stock predictions. We'll also cover other emerging industries, including renewable energy and artificial intelligence, that could shape tomorrow's markets. If you're interested in learning more about building a diversified and future-ready portfolio, stay tuned. Make sure to hit the notification bell so you don't miss any of our expert insights. And if you want to access exclusive reports and resources, check out the links in the description below. Thank you again for watching, and we'll see you in the next video.